It's your boy Crypto Blood, and welcome to another double spending episode, another roundtable with my man Phil Kennedy. I love these roundtables. I snuck in on this one last minute, and boy was I glad I did. David Collum, Larry Lepard, Anthem Blanchard, and myself, and of course Phil Kennedy hosting this one. Absolutely honored to be amongst these individuals. Just met all three of them actually for the first time, but I am a huge longtime fan of David Collum. Actually found him, I think, through Zero Hedge. He's a writer on Zero Hedge, and also from Chris Martinson, Peak Prosperity. He's done a few interviews with him in the past. He does this yearly report that's really great if you guys haven't seen it. So check that out. Just do a search for him and you'll see that. Enjoy. Make sure you guys like, share, and subscribe. And click that bell to receive more videos like this. I'm out of here. Holla.
Got our roundtable lined up. Lawrence Lepard, top left. Anthem Blanchard, top right. Dave Collum, lower right. And Crypto Blood in the lower left. Gentlemen, thanks for coming on. I will start with you, Larry. You know, fun to get you guys together on a day like today. Gold up over 1550, 4%, 4.3%. The market, let's check real quick, down over 600 points. It was down over 900 earlier. We might crash through Dow 1800 today, maybe tomorrow. And that's relevant because the Dow Gold ratio is about to blast through 12. So, you know, this has been a story that's been taking place over many years. How do you feel today?
If you're asking me, I feel pretty good. It's the thesis that I've had for a long time is starting to play out. The largest credit bubble in the world just burst, and there's no going back. I've got the gold, the front month future up $74. I haven't seen that in a long time. And I think all these guys would agree that what we're seeing here is kind of the end of fiat money. You know, we blew the largest credit bubble in the history of the world. 0% interest rate policy from 2008 to 2015 was an economic crime, in my opinion. It led to a lot of malinvestment and bad choices. And many of us said it would not end well. And for quite some time, we looked wrong. And in the last month and a half, what we warned of has happened. And the credit collapse has been fast and furious and complete. We've gone into a severe deflation, and we've all seen the Fed's only reaction is, it has been and can be, to print money. And the size is frankly stunning. To I think everybody in this group and probably to the outside world as well. It's kind of unlimited. You know, think about 2 months ago, the Republicans were criticizing Bernie and Stephanie Kelton for MMT, and now they're embracing it because the alternative is a deflationary collapse. So the obvious implication for this, in my opinion, is that old money, real money, 5,000-year-old money, gold, and its sister metal, silver, and then ultimately newer sound money, crypto, Bitcoin, are in the process of replacing fiat currency.
Dave, you've been Dave, you've been documenting this collapse on your annual review and on your Twitter page. Your reaction to Larry's words there?
Yeah, I'm not as much of a sort of gold sound money guy as you guys. I'm in it for the 30-year trade. And I would love to go back to indexing the S&P, but we're getting closer. My obsession of late has been the bailouts and how they're going to hand huge gobs of money to companies that should be detonated, and you know they should sell them in the Wuhan meat market when they're done. And it's bothering me to no end because it's going to be the biggest heist in history. By the way, Crypto Blood, you're going to screw up my Twitter feed again here because if you get a lot of followers, my Twitter feed is completely filled with crypto guys now.
Oh no!
And I'm their bogey. I don't own any Bitcoin, and they want me to get to their team somehow. And you cannot imagine how many people say you got to buy Bitcoin today. I'm going to watch you guys from the cheap seats, wave, and wish you well. And I think everything's good. I think we're witnessing a horrendous theft by corporate America, horrendous theft by corporate America. And I've been losing my mind so much that I think, God, I got to get off Twitter or something, because it's just my brain is exploding. I thought I'm in the movie Scanners. I've been swapping DMs with Ben Hunt, who looks like he's also losing his mind, and so that's the thing that I've been obsessing over, is how this bailout's going to be nothing but graft and greed and corruption.
Yeah, I can't believe what we're witnessing. It almost feels like 1984. Coincidentally, that's when Anthem's father did this interview with F.A. Hayek. Folks need to go watch. I'll throw the clip here on the live chat so that folks can easily find it. But before Anthem's father's work, regular citizens couldn't buy gold. Now they can just get online and have it shipped directly to their house from places like this. And we take it for granted. Anthem, what are your thoughts today and your reaction to Larry and Dave's comments?
Astute. We had an interesting conversation in December, and it looks like a lot of what we said came to fruition a lot faster than I thought it would. And but we've seen it happen all at once. I think you're seeing really the need to increase base money effectively, because the system is so gargantuanly over leveraged that I'm of the opinion that only a few institutions really even know the degree of which the number of dollar derivatives even exist. I mean, it could be, numbers of quadrillions at this point. And so, even if you gave out $100,000 to every US citizen, you're only going to bring, up about 33 trillion in debt, which is an insane number when you look at it to GDP. But when you compare it to total US interest rate swaps and other US dollar denominated derivatives, it's actually a very small amount. And the issue of 12 years ago is that everything went to the top, and it did work for quite a long time. We had the longest bull run ever in stocks, but still too much went to people's art collections and car collections, and not enough, to the base monetary supply. So it ended up just increasing the leverage multiple, and that's what you're going to see again. Every time the Fed takes on more debt, and now QE, that they've announced unlimited QE now today, and all of a sudden that debt leverage increases. So the only way to really deleverage it is really by issuing money that devalues the money and it adds monetary base. And I'm of the opinion that you'll see lifetime tax credits before all is said and done. I don't know if it's this cycle or if it'll be the next cycle. Maybe it'll take another 5, 6, 7, 8, 10, 12 years, but I think it'll happen in my lifetime.
Larry, you watched Neil Kashkari last night on 60 Minutes so that we didn't have to.
Thank you. Well, forever in your debt.
Thanks for your service. Yeah. What was your reaction?
Oh, so painful. He's such a narcissist. They're doing nothing but saving the world, and he saved the world in 2008, and he's going to save it again. Just trust him. I guess the thing that was the most stunning to me, and I think even Scott Pelley was a little taken back by it, was when he more or less said, Scott, because I think Scott asked him twice, is there any limit to how far you will go with these policies of printing money and to try and, prevent this problem, this deflationary collapse? And he kind of said, no, there's absolutely no limit. We are going to do whatever it takes. I mean, in as many words, implying he would do whatever it takes. And, the thing that I think the great error that America has made in the last 15, 20 years, but more pronounced since 2008, is to think that deficits and printing money are painless. Cheney said it years ago that deficits don't matter anymore. And, in a deflationary environment that we had for so many years, that, that kind of held true, and everyone got lulled into actually believing that. But it's changing, and Gresham's law is the law that says that when the money becomes no good, people will go to a harder form. And, it's going to become clear that the money is no good. When you're handing out trillions of it, as Dave points out, you're handing it out. I mean, one of the most egregious things, Dave, I'm sure you agree, was, and I put it on Twitter, that, they were floating all these corporate bailouts, and then they were saying they weren't going to disclose where the money went for 6 months. It was all going to be kept secret, which is just, beyond the pale. And I think the Democrats are going to push back on that. But that, and the reasoning for that. The reasoning for that is that they're giving it to Citadel and all their friends in the hedge fund community to prevent them from going tits up.
Yep.
So it's a very, very corrupt and broken system, and we're all going to be hurt by its bursting. It's a fourth turning. This is on the order, in my opinion, it's on the order of magnitude of the Great Depression, World War II, the Civil War, the American Revolution. I mean, a currency collapse is an absolutely difficult and brutal thing. But guess what? When this, so that's the bad news. The good news is people are going to be so pissed off that we are actually going to reform this system. I'm an optimist. I believe that the core of the American public are good people, and that once they understand what was done to them and who did it, Ben Bernanke will be in the history books right there with John Law and all the other and Rudolf von Havenstein, who's on Twitter, by the way. and
He's the best.
He's hysterical.
Mm-hmm.
He will be reviled. He will be absolutely reviled as as an evil guy who ruined the currency and ruined the country. But he really didn't ruin the country in the sense that the people are still here. As long as we don't get in a war, all the productive assets are still here. What we just need to do is go to sound money. I mean, this is not, Anthem's dad knew this a long time ago, and that's why he lobbied to get gold and silver as money again, and the Constitution says it. And I mean, this isn't hard, folks. We just got to go back to sound money. And, Germany did this in 1923, and 1 year later, they were on a gold standard, and they were being productive again, and life was okay. Now, they were also pissed off and angry that they fell for this idiot called Hitler, who told them they could be great again if they went and conquered Europe. But, that's what happens when you get all your wealth wiped out. It's bad, but at the end point will be good. For those who thought, there's never going to be any reform in this broken system in America. Oh yeah, there's going to be a lot of reform after this. At least that's my view.
What do you think, Dave? Are the pitchforks and torches coming out, or is this just going to get papered over again and everybody's going to pretend like nothing happened?
I'm not sure I'm I'm optimistic as that. I think if we have a true catastrophe, the pitchforks will come out. We'll straighten it out. The thing that pisses me off the most is that right now, so we've all been predicting that the bubble would explode with violence. And they then got handed an excuse that they could hide behind. I wanted it to just blow up on its own accord. And instead we handed them exactly. There's a good picture.
That's Craig Ferguson. Yeah.
The greatest excuse of all time. And you guys must have seen this when Santoli came out yesterday and he tweeted, he said something about the crash that nobody predicted.
Larry Kudlow said that earlier today.
Yeah. And my Twitter feed alone beat the snot balls out of him bad. I mean, it went right down my list of followers. They were pounding the crap out of Santoli. And pretty soon he started saying, well, based on the virus. I said, yeah, we didn't care about the virus. We cared about the fact the biggest credit bubble, the biggest asset bubble, and the biggest bond bubble in history are about to create quite a mess.
The virus was just the pin. I mean, the bubble was there ready to burst.
But it's also a cover story, which bothers the crap out of me.
But you know what, David? Yes, you're right for now, but the virus will burn out. And then when the currency fails, it'd be hard to blame the currency failure on the virus. The currency failure, I mean, the Federal Reserve is supposed to defend and protect the currency and the economy. The currency goes to zero. The pitchforks are going to come out. And I'm telling you, the people are going to be at the top of that list are those Fed governors, including cash and carry.
So to get prepared for today's interview, I finally listened to this older interview from 1984 that Anthem had been telling me about, and I pulled an interesting clip from it. I'm glad you're on the show today, Anthem, because I want to get your reaction to this. I know you've heard this probably many times, but the other guys haven't.
Well, all the more need for your sound monetary reform.
Yeah.
I don't believe that we should ever have a good money again before we take the thing out of the hands of government. We can't take them violently out of the hands of government. All we can do is, by some sly roundabout way, introduce something they can't stop.
Introduce by some sly roundabout way something they can't stop. So you kind of bridge the gap between the gold bug world and the crypto world. I know you've seen that interview probably many times. what's your reaction to that today as we sit here with gold up, 4.3%, Bitcoin holding
It
steady?
was prophetic. I mean, in that interview in '84, my dad's interviewing economist, Nobel laureate Frederick A. Hayek, and he wrote A Road to Serfdom, famous book, and he also wrote Denationalization of Money. And really, the last 10 years of his life really heavily campaigned the idea of central banks basically being useless instruments that he spent decades advising, and that we need to abolish them. And what they're talking about in the interview is this concept that only through some sly mechanism that the government can't stop will denationalization of money actually occur. And they also introduced the concept of having units of account that we would basically refer to today in the space as stable coins, so that are metal based and basically are used as forms of value. So, being that that was 36 years ago, they're talking about $200 billion deficits estimated for the year 2000. So it's interesting to have some good perspective. Rewatching that, I always enjoy it. My dad's anniversary of passing was 21 years ago, back on the 20th. So I reposted that, and it got quite a good reception. So especially this year, maybe better than ever. So.
Crypto Blood, we got a comment here. Bitcoin fixes this. What's your reaction to what Anthem just said?
Well, it does, but we have to remember, and what Larry said was right on the head. We're in a deflationary spiral right now. So I think we're going to see, a lot of assets go lower before we see the true assets head higher, like precious metals and crypto. So people just have to be patient. I don't think it's going to, people are always hitting me up like, hey, CB, what's going on with Bitcoin? Why is it going down? I'm like, well, when you have a situation where people are panicking and they're scared, they're going to flight. Their flight is to safety, which unfortunately is still the US dollar right now in this paradigm that we're in. So people are flying to dollar, to the treasury, to the bonds. And so once that's done, I think you're definitely going to see precious metals and Bitcoin go up like none other. So,
yeah, Larry, the viewers and listeners would definitely get upset with me if I didn't switch gears now to the mining sector. The gold bug index getting pounded today, pounded year to date.
Pounded year to date, not pounded today. I'm showing the GDX up 11.8%. And the GDXJ up 14%. So
sorry, I must have the wrong chart here. But yeah, I mean, we're definitely, it's one of the areas that's up today, but it's not as up as much as maybe yourself and myself and maybe even Dave Collum there would like it to be. What are your thoughts as we sit now?
Well, so gold stocks are claims on future production of gold, and they're risky. There are a lot of things that can go wrong in the mining business, and they depend upon future higher gold prices to appreciate, because they're a spread play between the price of the gold and the cost of pulling it out of the ground. And they, when we went risk off, I mean, a month ago, we went risk off big time in everything. And it was an enormous global margin call and a deflationary impulse. And when that kind of thing happens, you don't always just sell what you like. You sell what you can. And they were liquid, and so gold went down 10 or 15%. It went down less because the metal itself doesn't have the risk of the mining operation attached to it. But obviously, the miners all got dumped, and the price is always set at the margin. I mean, a lot of us just wanted to hang on to them. But obviously some people didn't believe or needed the cash, and they threw them out. And to me, it was throwing the baby out with the bathwater. Let me make a point that's important. I saw this, and I was just getting involved in this area in 2008. In fact, I got involved in this area because of the GFC in 2008 and the way the government came in and printed money there. And frankly, I thought that was when the currency was going to fail. So I've been plenty wrong. But what happened in 2008 is very similar to what happened here. You had a global margin call. In that case, it was actually worse. Gold went down top to bottom about 35%. Stocks went down about 65%. In this case, gold went down about 20, and the stocks went down about 45, 50-ish. Depends on the segment. You had a global margin call, and all these things got sold just because everyone was scrambling for cash. At the time, what happened then is that the Fed stepped in. They guaranteed everything. They did TARP, TALF, you name it. They printed a ton of money and they reliquified the system, and the gold stocks took off. They recovered within 2 months. Within a year, they were up 100%. The same thing's going to happen this time, in my opinion. And we've started to see that now. I mean, I think the margin call is subsiding. The stock market will perhaps find a base in here, but even if it doesn't, the fact that gold's up $75 plus today is a big indicator that the market sees that the printing is going to create inflation, and therefore gold and gold stocks are the best protection in the world against inflation. And I think this is an enormous opportunity. I mean, my fund, I was up 97% last year. I was running up 10 or 15% this year, and then this thing hit, and I took a huge whack. I mean, I don't know if it's down 30% or perhaps a bit more, but I view it as a buying opportunity. And if I'm right about the price of gold, it certainly is a buying opportunity. I mean, if you don't believe that gold will benefit over the next year, well, then it's not a buying opportunity. But I just view this as a margin call that hit everything. And I mean, Bitcoin, by the way, I own Bitcoin. It's about 10% of my holdings, personal holdings, and it got hit too. I mean, people sell when you got to remember that a lot of people in this world operate on leverage, and they buy risk assets on leverage. When risk assets start going down, they start selling. And all correlations go to one. They were selling everything, so, if you believe in your asset, you just hang on to it and you accept that part of the, Bitcoin, look how much it's been up over the past 4 years. I mean, gold stocks have been up, I was up 97% last year. I mean, part of what happens is, you have these serious corrections and they test your courage. I mean, Richard Russell was a great commentator, was around for a bunch of years. I mean, he always used to say that, bull markets try their hardest to throw off all the riders. And, this is a perfect example of that. I mean, I think gold stockholders are right, but this bull probably threw off some riders here. Yeah, that's a good chart. Some people probably, that's out of historical.
Yeah.
Can you put up a GDXJ or a GDX chart?
Sure, yeah.
Show, because it's helpful to understand that in general, this stuff was going up. And yeah, look at, this is, I don't know, what's the time frame there?
5 years.
Yeah, so the bottom was in 2015-ish, kind of. We had a big impulse up in 16. We corrected off of that. We corrected to a higher low. We had a big breakout last summer when we went through 1365. We went up a lot, and that created my good year last year. We backed off of that a little bit. Then we were going up. Things were looking pretty good. I was feeling great in early February, and then wham, margin call, and we lost, 30% of our value, right? Bingo, in a month. But, one of these things is not like the other. I mean, the stock market lost 30 to 40% of it, 30 some odd percent of its value, but it was really, really overvalued. The gold stocks market lost 30% of its value. It's in the early days. The stock market's in the late days of a very inflated bull market. It's been in a bull market for 11 years, right? The gold bull market started in 2015. So we're late 2015. So really 2016. So we're 4 years into this thing, and it's going to run for another 5 or 10 years at least. So it's a correction. It's painful, but I think it's the place to be.
Dave, do you agree?
I'm a little more nervous about gold stocks. I still haven't figured out why gold could go from 256 to 1900 and then back down, stay 4 digits, and have the gold equities give it all back. That bothered me to no end. They should have been making money at 1200, and so I'm a little troubled by that. I've been tempted to buy the gold equities again though, and I'm pretty exposed to gold. I'm at about 25% variations of physical gold, including physical gold, including Central Fund of Canada. Let me put out a wave to the silver gold ratio buyers. I can't imagine the person who took all their gold and sold it and bought silver this year at the start of the year. That would be an extremely painful play that worked poorly. I guess I'm staying with gold rather than a proxy for gold, and I'm willing to give up the upside for less volatility.
Anthem.
So Dave, do you think? I'm
Yeah.
sorry.
No, go ahead, CB.
I just had a question for Dave. Do you think that we'll see more downside to gold, or do you see a bottom in gold right now?
Boy, it certainly seems like it's pretty resilient. I do think the sell-off was, probably the story is the risk parity funds. I think you could possibly attribute the entire sell-off to Bridgewater. They might have liquidated their, remember when Bridgewater and Dalio was saying you got to own gold? Well,
yeah, cash is useless. Yeah.
So much. He also said cash is trash. That's going to work all over time. Right up there with Yellen saying no crisis in her lifetime. Well,
oh man,
it's possible someone's going to go slice her throat, and then maybe kind of true. But there's a lot. I save quotes, and there's a lot of real bleak ones out there. And so, gold. I'm not nervous about gold right now at all. And I think silver might have a phenomenal run because I think the gold silver ratio guys are not nuts. It just played so poorly. I just can't imagine the pain you'd be feeling if you rolled your gold at 100-to-1 ratio over to silver and then watch silver get pounded for 40%. That would be. One time Stephen Roach said the most painful thing would be to call it right and play it wrong. And boy, that really resonated with me. By the way, I was paying attention back in January to the macro guys, heads up to those guys. So I had a email cycle going between guys like Roach and Einhorn and then DMs to Bianco. And it was funny watching Roach trying to get his brain around it. He now gets it, but he was really scrambling to figure out the coronavirus risk. He now gets it. Bianco was all over it. Bianco, I think, was the most prominent guy who right away spotted that you can't shut down supply chains in China and have nothing happen.
Yeah, I saw him on Double Line a few times, and I think he got it right away.
And I don't see how we avoid a profound economic downturn.
That's my concern, because I still don't think America is taking this virus seriously, even with the actions that we're taking. I just don't think so. My wife is a pathologist, and she's we have at her campus alone, there are 124 cases of COVID. Wow. Okay, so this is like, no, it's not the end of the world, but younger people are dying from it. Younger meaning below 45, below 50 years old. And they're, the whole narrative, the only old people, okay, boomers, you guys, you're out of luck, everyone else is fine, that narrative is not true. And
I think they did it to not scare people. And then what they started to see videotapes of, Fort Lauderdale spring break, and they said, holy cow, we got to
exactly
it out. So I think the first one was to not sow fear, and the second one was to sow some fear. And the other thing is, I think we've already the ship has probably already sailed for millions of mom and pop companies. I don't think they're coming back. I think that right now I'm essentially supporting somewhere between 2 and 3 and 4 households because of adult children who are right now unemployed.
Yeah.
Yeah, and I can do it. And worst case scenario, I just work another year or two, and I'm the breadwinner for a lot of people. My son's significant others with him here, and we're all living communally here at this point. And those two are musicians. When are they going to get gigs back? My older son runs events at the Council on Foreign Relations. There's one for you. An event manager. There's a great career prospect right now. So he's furloughed for 3 months.
So money's not going to fix that, Dave.
Well, money from dad to him will.
Well, yeah, but I'm just saying in general, coming from the Fed or the government, those are structural changes, right?
Well, don't forget, these are the same guys who said they were going to fix climate change with money. So you got to realize that they're kind of retarded at some level. Either emotionally retarded or much more dire and politically incorrect version. But
well, and in Cash Carey, he's such a sociopath. He'll have you believe he could fix inequality and government education and you name it. Ignoring the humanitarian aspect of this, which I know is weighing on all of our hearts. it's so intertwined with the financial world. Anthem, we're looking for solutions on the show. You've got a great one out there. Folks can follow Anthem over at Anthem Hayek on Twitter. Anthem Gold. Tell us about that. What does this bring to the table that the market didn't necessarily have before?
I think it brings commercialization of Bitcoin, and really Bitcoin was born out of the last financial crisis, and Satoshi actually coded the bank's bailouts in England in the code. And I think that we're going to now see what's been the most lucrative investment of all time, which has been speculation on a hobby, which has been Bitcoin and Ethereum really being second best, the best two investments of the last 10 years, and nothing else was even close in terms of liquidity. And I think that we're going to see people do things like shop in virtual shopping arcades and going to be interacting with each other in virtual reality. And I think that this is going to be the future, and that it's only enabled by software that's trusted. And that's really why Bitcoin is value and is the most valuable appreciation of any asset ever in history of a 10-year period, is because it's bringing us to a different way of commerce. We have to get out of this commerce of money, ultimately, is a conclusion that I've come to. And we have to move back to a barter system that is only able through automated, perfect booking, reconciliation, and accounting of all math. And that's really the invention that Bitcoin has provided for us with. So I personally am scared. I expect equities to drop another 50% from here across the board. Yeah. I think gold bullion will hold up relatively well. I mean, it's been the steepest decline in equities ever recorded in US history, at least. I expect it to continue because ultimately I don't expect the market to get the liquidity in the places that it needs fast enough. And I think that ultimately the Fed will way overshoot like it always does. But before that happens, I expect there to be a lot more carnage, Treasury direct. And I'm very bullish on Bitcoin after what's called the halving event. It's occurring in May. We don't exactly know when, but it should be around mid to early May. And basically this cuts the inflation rate of the entire system of Bitcoin, which is really a system of software keys that allows you to write a piece of information into this piece of software that's so far been the most difficult to change. And it's why it's worth so much. And I think if you start cost averaging now, maybe wait a little bit until May, and then really historically, whenever these halving events have happened, the price of Bitcoin has shot up. And the main reason for this is that there's an OPEC kind of effect between the miners, and that they have to be able to pay for their mining equipment. So restrict supply coming onto the market. It's kind of like more like OPEC of the 70s than OPEC of today.
I was going to say, I hope it's not OPEC of today.
Not OPEC of today. Yeah, OPEC of today is Saudi Arabia. So yeah, this is.
I also have the markets dropping 15% by the close today. So.
Well, I don't know, Phil, if you know, the Senate failed to. Yeah, the Senate failed to pass that Corona stimulus package for the second time. So it's just very disappointing to see our lawmakers just really not get it. Like, people are really in dire straits right now. They need the money yesterday, and they're still playing these games. And it's very sad. And I hope what Larry said is true. We kind of bring pitchforks out after this all is said and done, but it's just very depressing.
But the people aren't going to get the money. So if you actually look at what's going to go to the people, it's going to be small. It's going to be 5% of the money. And I think the reason that the Senate is not doing it is it gives their lobbyists more time to throw more money at them.
Yeah.
So that they can get more things under the tent. It takes a long time to round up all that graft and corruption and get it all into one bill. Wow. I really think that's what the stall is. I think they're waiting to get it. Everyone's got a pet project and they're just negotiating them. And I read an article about a month ago about one of the previous bailouts. I got to go search it because I save it all, of course. I got to search it. And they did an autopsy on where all the bailout money went. And you were projectile vomiting before you got halfway through the article when you looked at where the money actually went as opposed to making America great. And so this money is going to be a nauseating display of graft and corruption. And Joe Six-Pack, the children, the little guy, they're not going to get it. You'll only get it through this tacit effect of when the economy picks up again. But I don't think this money's going to pick up the economy. I don't see it. I think the economy will recover when the economy is ready to recover.
Yeah, I think it's just going to make it worse. And then, to hear that a company like Boeing may get a bailout, that's pretty disgusting from my standpoint, especially when they're building aircraft that just slam into the ground.
Phil, that was the reason for the, at least what I heard was the reason for the hiccup today. The Democrats wanted to, before Boeing got their bailout, they wanted them to have some type of environmental social responsibility string attached to seriously. And that's the reason why we had a hiccup today. So I don't know, man. It's just
so how about the cruise lines? though? The cruise lines are not US based.
Yeah.
They pay no taxes. And here's the staggering one. They hire so many foreign nationals from places where you can't rub two nickels together. That I read an article, I think it might have been one of Ben Hunt's, where he said that the average pay of a person on the cruise ship signs up for 11 hours a day, 7 days a week. That's their gig. And they get $2 an hour. So these cruise ships companies should be taken out in the Atlantic and scuttled.
Yeah, it's pretty disturbing.
The important consideration on stocks is that there's a lot of talk about trying to restrict buybacks and dividends and executive pay. But the reality is, if you look at the stock market performance, especially the last 2 years, I mean, it was largely driven by buybacks. So, and another, maybe it doesn't affect some sectors potentially as much as others, probably software, big cap software and banks and things like that get hit more, but another consideration.
Yeah, but I'd love to see the buybacks go away. As a free market guy, I'm okay with the idea of a buyback, but since they're a source of so much graft and corruption, at this point, I'm willing to go back to 1981. No more buybacks. That will collapse the market because that has been the bid under the market. I totally agree. And the fact that all these companies getting bailed out spent all their potential cushion that they could have had. I did a tweet today or yesterday, I guess it was yesterday, where I said, we're all encouraged to have 6 months worth of money saved up in case of a rainy day and we lose our job and something bad happens. And for most people, that's not doable, but hopefully you guys have it. And but the average Joe has trouble getting there, but that's what we're told to do. But the companies apparently don't have to do that. So a month into a crisis and they're broke. And they're broke because they took all their cash and they put it into buybacks. And so as far as no mercy, no, I just put those companies on the courthouse steps, auction them off. The company's assets are still there. The workers are still there. Someday there'll be the demand. Hang the bankers by their balls. Hang the corporate CEOs. I don't want to hear about restrictions of buybacks. I want none. I don't want to hear about restrictions of bonuses. I want none.
Yeah, but Dave, even you talk about Wall Street, but even Main Street. I mean, it's been not even a month and they're gone. They're out of it, and because it's malinvestment. It's so much easy money the last 10 years. You've had businesses that really shouldn't even exist that are out there.
Right. It's horrifying, and so it's time for the reset. And we're all going to suffer, but we're going to suffer more if we don't do it now. So I think Larry was hinting at that, right? The end, the pitchforks will come out. We'll skewer a few bad guys. That was Obama's biggest mistake, in my opinion. I'm not an anti-Obama guy, but when he hung nobody, when the Obama DOJ hung nobody, it left us all with a bad taste in our mouth, and we are ready to really, really guillotine some people, I think.
Yeah,
I hope so.
You knew the fix was in when he picked Larry Summers as his Treasury Secretary. That was when I knew, that he was full of shit and he wasn't going to do anything. So there was a Pecora commission that happened after the collapse in 1929 because there was a lot of malfeasance back then. It led to Glass-Steagall. It led to the SEC being created. It led to a lot of things that really improved the corruption on Wall Street. They reduced margin requirement, or they upped the margin requirements. And we need the same kind of thing. We need somebody to come in here as a muckraker and try these crooks. And with respect to the buybacks, Dave, rather than let the companies fail, I mean, okay, maybe. The other alternative is, nationalize the companies for a brief period of time before you spin them out again so that and go after the guys who did it. I mean, you could claw back all these guys who made all this money on their stock options by levering these things up. We should go reclaim that money.
Mhm.
The government should basically say, look, if you were at this company and they were buying back stock and you sold your options into that, and that caused the company to go bankrupt, that's fraudulent conveyance. And there's actually legal doctrine that talks about that. And so you basically go get that money back.
So I'm typing about RICO, using the RICO laws against those guys.
Well, that would work too. Yeah.
And so you think, this is what I've been wondering. So you do think that legally we could claw back bonuses?
I do. I mean, I think
haven't known about whether we could or not.
Well, the issue is, can you have to prove that it was their intent.
Yeah.
But it's proof in front of a jury, right? And most of the juries, retirements and IRAs have been completely wiped out.
So
how do you think they're going to feel about it?
Here's the book you want to read. Jesse Eisinger's book. God, I wish I could remember the title. Brand new book. Anyone know it? Eisinger's book?
The old one was Chicken Shit Club.
Yeah, that's it. I guess it's been there a while. The Chicken Shit Club describes what was going on inside regulating world and inside the DOJ. And I don't know about you guys, but I left thinking there was no hope because these guys no longer even want to take on the big fights. Yeah. So they won a couple big ones like that Roskamp or whatever, the judge, and then some appeals court just undid them all. And so you were left with a sense that we will simply never use the legal system to get to the bad guys, even though in the past we have.
Well, this has created a terrible amount of moral hazard. I mean, these executives figure that out quickly, and they say, hey, look, crime does pay. Why not take the risk? We'll get a slap on the wrist and go about our business and then buy a $250 million penthouse in New York City, right? Larry, your reaction?
Yeah, I mean, I think that's right. I mean, you need somebody, politically, and I mean, let me say this. I mean, I don't agree with all his policies, but and I don't agree with all of her policies, but I kind of think that Bernie and Elizabeth Warren actually understand the financial corruption that's taken place. And what you really need is you need an attorney general that's pro the people and anti-business. And there are all kinds of laws that have been broken. I mean, right, Patman? I mean, all kinds of stuff. And basically everybody in the government is just sitting there rubber stamping whatever people are doing with the hope of getting a big high-paying job from one of the companies that they're rubber stamping on a coming out basis. They're all bought off. I mean, it's just completely obvious. And so the people actually need to find a president, and then the president needs to appoint lawyers that will actually prosecute and follow the laws. The laws are there; they're just not being followed. I mean, I had a friend who was a good big corporate lawyer, and he said, "God, I wish I was inside the DOJ when they were giving those bailouts to those banks, because man, I would have taken one big pound of flesh." Yeah, okay, fine. If we don't give you the money, the ATMs aren't going to work. Fine, we'll give you the money, but guess what? Entire board, you all resign. Top 50 managers, you all resign. Jamie Dimon wouldn't be a billionaire. I mean, Lloyd Blankfein wouldn't be a billionaire.
Free John Corzine.
What?
Free John Corzine.
Yeah, I mean, yeah, right. I mean, the 2008 was the biggest financial crime in the history of the world until this one, and this is probably going to be bigger.
Yep.
But, and by the way, the American people know it, and they're pissed off, and rightly so. This government doesn't work for the people. This government works for the plutocracy. And
they'll definitely know it in about 2 weeks.
Yeah, well, that's the
when
point.
The money runs out.
That's exactly right. Well, then when the money runs, or crypto, when the money doesn't spend anymore.
Right.
When the money's got no value.
When they realize getting $1,000 is not much.
Yep.
Right.
Yep.
That's exactly right.
Well, I mean, I think we're going to see 2,000 a month now that Bernie's offered it out there. I think 2,000 a month. I mean, this whole fiasco hysteria should at least show us all we really could do a lot of benefit with distributing supply chains, distributing the way we do business. This is going to lead to more centralization of supply chain, ultimately, more consolidation, more acquisitions and mergers. We're ultimately going to become a more fragile system. This is exactly why we need to form alternatives. So there's silver linings here. They're making us realize these things. They're making us think about community in different ways. And I think that ultimately some of the skill sets that I think we're all picking up right now that we maybe never knew we had, just kind of out of necessity of the situation, that maybe we can turn this into a grand positive. So, instead of trying to keep bailing out the negative, which just gets more negative every bailout. So
not on the path to do that right now. The path we're on right now is they're playing off everyone is scared, everyone's worried, they don't have work, and so sign off and we'll take care of you and we'll give you $1,000 and we'll get you back to work. And I see people talk about how, if you bail out the companies, people keep their jobs, and smart guys on Twitter say, they think that somehow if a company goes bankrupt, it goes away, not realizing no, you just get new owners at a very cheap price, and the company gets run by people who actually know what the hell they're doing instead of a bunch of sociopathic corrupt bastards. And I've been catatonically angry at this since it's over, I'd say the last 5 days. I've been fighting on Twitter like crazy with people who say, oh, we got to bail them out. Smart guys. I'm going, no, you're so full of shit. Block me.
Yeah.
Well, I'm to keep going.
I'm the kind of black sheep in my family, Dave. I've been talking about this for well over a decade. I was getting an MBA in 2008, 2009, so I had a front row seat. And in fact, I got it at GW, where they invited Bernanke later to come give his lecture series on what should be done to fix all this, and rolled out the red carpet for him and treated him like royalty. And little did they know that it was going to make matters much, much worse. I had the next thing I wanted to talk about with you guys was this comment that I put on Twitter the other day. I've borrowed it from Larry. I say it more now often, actually, because of him. This idea that we're on the road to Weimar. I had to check my old Hotmail emails. And indeed, I sent this photo to my friends and family in 2010. And I said, hey, I don't have kids yet, but when I do, I bet you they'll be playing with dollar bills just like this. And one of my astute followers pointed out, if they mandate FedCoin and eliminate paper, it very well could be the case. That didn't even occur to me. So I wanted to get your reaction to that, guys. Is there a FedCoin coming down the pike here sooner than we know it? Who wants to take that one?
Somebody else.
I think so. I think they're trying. I think they're desperately trying, and I don't think it'll be that difficult for them to do, as long as they keep it within their existing channels of control. It's just like taking ACH Fed wire system and replacing it with, crypto Fed token. So, things clear a little faster for them. They should be able to account internally. They'll control all the accounting. So it won't be a true, blockchain protocol in the sense that they'll still control it. So the information will still be manipulatable, which of course they need. But I do expect to see big pushes here to, use this excuse to get rid of cash. I think that this, very much like 9/11, that there was a lot of pieces of legislation like the Patriot Act that were sitting in the wings for years, maybe even decades, that came out all of a sudden because they needed a catalyst, black swan. And I think that this is serving a similar function from my observations.
Dave.
They had a big push after Davos about 3 years ago, where there was this whole series of articles about going to a cashless society. I actually plugged my nose and read Rogoff's book after I gave him shit, and he said, read my book. And so I read my book, and I said, you don't understand the importance of the civil liberty of having cash. So every one of these treatises on a cashless society, always somewhere around paragraph 10, says, and by the way, it'll allow us to control monetary policy better, which means they're going to use it to screw us, and there will be no way to hide if everything's in the bank. And I'm just stunned by how few people understand the constitutional level importance of being able to use cash and just to be able to hide. And they always say, oh, the bad guys, the drug lords and everything. I say, I don't care. I let them, go fight them on another battlefield. I want to be able to use cash. And maybe that'll get us to gold and silver and the whole enchilada, right? I don't know, but I think we ought to be fighting like crazy to stop the cashless society. I think it's a disaster.
Well, doesn't every $100 bill have traces of coke and other narcotics on it anyway? I mean, if you really want to move illegal narcotics, the cartels, I imagine, are still using cash. All right, well, it's probably time to wrap up as we head into the close. Why don't we start with you, Larry? What's your final word today on yet again another historic day in the markets? Where can folks find you, and where else would you refer them?
So I'm on Twitter at Lawrence Lepard, and my email is llepard@ema2. I run a private fund that accredited investors can invest in if they have $50,000 or more. My word to everybody would be, if you don't have some allocation to physical silver and gold and gold mining stocks and Bitcoin, you're going to regret it in the next 5 or 10 years. You're going to severely regret it. And the amount of weighting you put into it, that's your choice. They all have risks, but the weighting of zero in a world where the government just committed to print unlimited sums of money is an enormous and grievous error. And there are plenty of stories of the history of hyperinflations. There was the busboy at a hotel who bought the hotel with this gold coin that somebody gave him as a tip. I don't know if that's true, but the point is that sound money, in a currency collapse, sound money is what you want to have, and it doesn't even take that much. But to have zero of it is going to be a really bad choice. So I would encourage everybody to make sure that they buy some gold, some silver, some gold stocks, and some Bitcoin.
Thank you, Larry. Anthem, your final word, where else would you refer folks?
I like that. I do unfortunately think in the very near term treasuries. Obviously with me, I'm not a fund manager, so I can't really recommend things, and I don't have the same level of proficiency or knowledge or experience as Larry. I like a lot of what he said. Personally, I think that I agree with all of what he said. Timing is pretty much impossible. Bitcoin, believe it or not, is a zero correlated asset, meaning it doesn't really go up or down with the stock market. It didn't look like that recently, but it really is when you look at the math and you trend it out for a few years. So it's a great place for really, really wealthy people to park a little bit of money as a preserve. And you can find me, Harris Software Development, the name of our software. The name of the software that we built for enterprises is called Hercules, herc.one. It's HERC.one. Anthem Gold, which you referred to, is the first platform we built. We're undertaking our first enterprise client. If you want to reach me, Twitter, Anthem Hayek, my middle name. My dad named me after Hayek and after an Ayn Rand book, so it's also my Twitter handle. And yeah, I'd love to reach out, or Anthem at herc.one. You can email me and love to correspond.
All right, finally, well, not final, we'll get CB at last. Dave, where can folks find you and your final word today?
Find me on Twitter at David B. Collum. I get emails all the time. Boy, managing my email box is getting harder. That's at dbc6@cornell.edu. If you think somehow when this virus goes away, the problems go away, I think you're dreaming. And I think whoever said that we got another 15% down, I think is the optimist of the group. I think we got a lot more down. I think we're going to be looking at, I'm going to get enthusiastic when the Dow's somewhere in the just above 10K. I think I'll be enthusiastic about buying some stuff. I think the next leg up is not going to be story stocks and price appreciation stocks and stocks that go up because of share buybacks. I think it's going to be stocks that make stuff and pay you to own them with a dividend that's solid and very little debt on the books. And those guys are out there. And I think if you buy a stock that has no debt and they sell a steady product and they pay you a 4% dividend, your return is going to be 4%. And I wouldn't buy long-term treasuries.
Good deal. All right, CB, thanks for being my co-host today. Where can folks find you?
_ on Twitter. That's where I'm most active. Yeah, man, I think personally we're in a deflationary spiral for a little bit longer. So that means stocks going lower, another 50% to 60% in my opinion as well. But that also means that I think gold is in the short term going to head a little bit lower. I think Bitcoin's going to head a little bit lower, but you can't time the bottom. So dollar cost average in. This is my strategy, is no financial advice, but that's where I think we are. And I think people really need to pay attention to we put so much emphasis on the stock market, but what's really going on is the debt market. The bond market is like falling apart. And that's where the Fed is really putting a lot of their, what you see them doing is trying to prop up that market. And I think that's the big bubble that's going to burst and really cause a lot of issues.
I'm just watching things accelerate here in the close as things settle. It was like down 500, now down 600. So not closing on the lows today, but also not a great day. I don't necessarily believe in green shoots and champagne something and all this stuff. I personally think that the market's got a lot further to fall. Personally, I'm not going to be a buyer of the S&P until it's closer to 1,000. So we'll see. But I'm just a financial counselor. I'm not a trader or a financial advisor or anything. So as always, this is a financial counseling show, not a investing show. So take everything you hear with a grain of salt as it comes from my point of view.
Wow, what a great discussion. Hope you guys enjoyed it yourselves. Please hit the like and share button for sure. And if you're new to this channel, make sure you subscribe. It's your boy Crypto Blood. I'm out of here. Holla!